Hey everyone, welcome back to Corporate Decoder, the place where we simplify the complex world of business and finance, and today we're diving deep into the retirement savings plan of a company that is known for its athletic wear and sneakers. We're looking at the annual report for the 401 Savings and Profit Sharing Plan for employees of Nike Incorporated. This document, filed as a Form 11K, gives us a peek behind the curtain at how the company's employee retirement fund is performing and what it holds. It is not just about numbers. It is about the financial health of the plans that support the people who help make those iconic products. First up, we've got the auditor's stamp of approval. Crowe LLP, a registered public accounting firm, has given their opinion on the financial statements. They say the statements present fairly the net assets available for benefits for the plan on May 31, 2025 and 2024. This means the financial information is, according to the auditors, reliable and free from material mistakes. They conducted their audits according to the standards set by the PCAOB, or the Public Company Oversight Board, which is like the watchdog for auditors. Now, let's get to the heart of the matter, the money. This table shows us the plan's assets and liabilities. As of May 31, 2025, the total assets available for benefits were a massive $5.896 billion. That is up slightly from $5.902 billion at the same time in 2024. On the liability side, things are very small. Accrued expenses were a mere $174,210 in 2025, down from $178,063 in 2024. This means the plan is in a strong financial position, with almost all its assets being what is available for the participants' retirement. The small amount of liabilities compared to assets is a good sign of stability. The biggest chunk of those assets, a whopping $5.824 billion in 2025, is in investments. This is where the retirement money is actually working for the employees. This represents the fair value, meaning what these investments are worth on the open market. It is interesting to note that the total investment slightly decreased from $5.834 billion in 2024. This could be due to market fluctuations, or perhaps more money was paid out to retirees than was invested that year. Another interesting line item here is notes receivable from participants. In 2025, this was over $62 million, an increase from nearly $56 million in 2024. What does this mean? It means employees have borrowed money directly from their own retirement accounts. The plan allows participants to borrow from their vested account balances up to a certain limit, and they have to pay it back with interest. While it can be a helpful tool for participants in financial need, a large and growing amount here can sometimes be a yellow flag, suggesting potential financial stress among some employees. Moving on to how the plan's assets changed over the year, this statement shows us the additions and deductions. For the year ending May 31, 2025, the plan saw total additions of over $734 million. A significant portion of this, $338 million, came from investment income, which includes the net appreciation in the fair value of investments and interest and dividends earned. The net appreciation in fair value of investments was a healthy $331 million. This indicates that the investments held by the plan grew in value over the year. However, it is important to remember this is just 1 year. Market values can go up and down, and this figure represents a snapshot. Importantly, there are investment expenses to consider. These were roughly $1.95 million. While not a huge number compared to the investment income, it is still money that could have otherwise contributed to participant accounts. The plan did a good job of keeping these expenses relatively low, especially considering the overall size of the investments. Then we have contributions, which are the lifeblood of any retirement plan. The company, Nike Incorporated, contributed over $140 million as employer contributions. That is a substantial amount, showing the company's commitment to its employees' retirement. Employees themselves were also very active, contributing over $232 million. This shows good engagement from the workforce in saving for their future. When you combine employer and participant contributions, plus rollovers and other receipts, the total contributions were a significant $391 million. On the flip side, the plan paid out over $740 million in benefits to participants. This is the money that is actually going to retirees. The fact that more money was paid out in benefits than the net increase in assets available for benefits over the year resulted in a net decrease of about $5.78 million. This is not necessarily a bad thing. It could mean a lot of employees are retiring and drawing down their accounts, which is the intended purpose of the plan. Let's touch on how the plan itself works. It is a broad program for eligible employees of Nike Incorporated, designed to help them save for retirement and share in the company's profits. The plan is overseen by a retirement investment committee and administered by Northern Trust Company as the trustee and Fidelity Workplace Services as the record keeper. This means there are established professionals managing and handling the day-to-day operations of the plan. Basically, most employees are eligible to participate from day one and can receive profit-sharing contributions after a year of service if they're employed on the last day of the plan year. This open eligibility is a good sign for employee inclusion. Employees can contribute a good chunk of their salary on a pre-tax and Roth basis, up to 75% with limits set by the IRS. They can also make catch-up contributions if they are 50 or older, and importantly, Nike Incorporated matches participant contributions. They will match 100% of the first 5% of a participant's eligible pay contributed to their account. This is a very generous match, a strong incentive for employees to save. Crucially, the plan is participant directed. This means individual employees choose how their money is invested from a range of options. This gives participants control over their retirement strategy. The plan does have some specific rules about investing in Nike stock itself. You can't put more than 10% of your deferral and match into the Nike stock fund. And there are limits on transferring existing balances into it. This is a good risk management feature, preventing over-concentration in a single stock. Now, how are these investments valued? The plan uses a 3-level hierarchy to determine fair value, prioritizing observable market data. Level 1 is for quoted prices in active markets for identical assets, which is the most reliable. Level 2 uses other observable inputs, and Level 3 uses unobservable inputs, meaning the plan has to make more assumptions. For common stocks like Nike's own stock, they are valued at the last reported sale price on the valuation date. This is typically a level 1 input as it is based on active market trading. The plan also includes self-directed brokerage accounts. These allow participants to invest in a wider range of public investments, including registered investment companies like mutual funds. These are valued at their daily closing price. A large portion of the plan's assets, over $5.1 billion in 2025, are in collective trust funds. These are essentially pools of investments and they are valued at their net asset value or NAV. While this NAV is a good practical way to estimate fair value for the purpose of the fair value hierarchy, these are not classified within levels 1, 2, or 3 because they are measured at NAV, per S-Hair, which is a bit of a shortcut based on the underlying assets. Looking at the fair value breakdown for May 31, 2025, we see $353 million in common stock, which is primarily Nike's own Class B common stock. Then there is $329 million in self-directed brokerage accounts. The vast majority, over $5.1 billion, is in those collective trust funds measured at NAV. So, a very large portion of the plan's investments are in pooled funds, which diversifies risk. Comparing that to May 31, 2024, the common stock value was higher at about $632 million, and self-directed brokerage accounts were around $303 million. The collective trust funds also saw an increase from about $4.89 billion to $5.14 billion. The decrease in the plan's total investments from 2024 to 2025, as we saw earlier, is largely driven by the reduction in the value of Nike common stock held, coupled with benefit payments exceeding new inflows. The report also touches on party-in-interest transactions. These are dealings with entities that have a close relationship with the plan, like the trustee or investment managers. For instance, a portion of the plan's assets are invested in Nike's own common stock. In 2025, the plan purchased over 234,000 shares of Nike Class B common stock and sold over 581,000 shares. This is common for employee stock purchase plans or company stock funds within a 400 WUNC. It is important that these transactions are fair and don't disadvantage the plan participants. The report indicates that these are exempt party and interest transactions, and the plan received a service credit of $100,000 to offset record keeper costs. There is a schedule detailing non-exempt transactions. In this case, on May 15, 2025, expenses totaling about $26,784 of the plan sponsor Nike Inc. were improperly paid by the plan. However, the company reimbursed the plan for these expenses plus earnings. This is a good example of how these reports catch small administrative slip-ups and ensure they are corrected. The net gain on this transaction was about $587. This indicates a minor administrative error that was quickly rectified. This schedule provides a detailed list of the assets held by the plan at the end of the year. We see the self-directed brokerage accounts Nike Inc. Class B common stock, and a long list of collective trust funds from BlackRock, like the MFO BlackRock LifePath Index 2030 Fund, F, and index funds for US debt and equity. The total current value of these investments at May 31, 2025 matches the figure we saw earlier in the statements of net assets available for benefits, $5.824 billion. This schedule also lists notes receivable from participants totaling over $62 million. These are the loans we discussed earlier, with maturities going up to November 2036 and interest rates ranging from 4.25% to 10.50%. High interest rates on these participant loans can actually be a small net positive for the plan's overall return, as that interest gets paid back into the plan. The report states that the plan is designed in accordance with applicable sections of the Internal Revenue Code and is considered qualified. This is crucial because it likely means the contributions made by both employees and the company are tax advantaged. Finally, the report is signed by David Gibbs, Senior Director, Global Benefits for Nike, Inc., on behalf of the Retirement Committee. This signifies that the relevant leadership within Nike has reviewed and approved this official filing. So what is the story here? The Nike 401 plan is a large, funded retirement vehicle for its employees. The company offers a very generous 401 CAC match, encouraging employee participation, and the plan is structured to give participants control over their investments. While the slight decrease in total investments from 2024 to 2025 is notable, it is largely explained by market fluctuations in common stock holdings and the natural outflow of benefits to retirees. The significant amount of participant loans is something to keep an eye on, as it could signal broader financial needs within the workforce. But the plan itself seems to be managed responsibly with a strong commitment from Nike, Incorporated. The financial health of this plan is a direct reflection of the health of the company and its commitment to its people's long-term well-being. What is your take on these numbers and what they signal for the company's future? Do you think the participant loan amounts are a concern? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives into corporate documents. Don't forget to check out the Discord community linked in the description for more discussions and insights. Thanks for watching. See you next time.